Hey folks, Ian here, Winning Edge Real Estate. And today I want to share a story with you of how we managed to get an 8,000% return on investment on one of our property investments. Now, I know some of you are saying, BS, and you're probably about to turn this off. But if you want to hear a true story, then keep listening. So, a couple of years ago, I found this vacant land, and there was a development that was going to go on there, and this is what's referred to as buy off the plan. Okay, so when there's a blank block of land, there's a lot of faith that has to go into someone saying, all right, I'll give you my hard-earned money in the hopes that you're going to build what you say you will. And I do warn you, you must be careful because some people will say anything to separate you from your money. So anyway, I saw this location and saw it had a lot of potential. And I used a little known strategy called a deposit bond to actually get this return that I'm talking to you about. And I'll step you through this simple process that not many people are aware of, to tell you the truth. And you can see if it could possibly work for you. Okay, so here's the money stuff. Number one, the apartment was selling for $600,000. This development only required a 5% deposit, which doesn't happen that often. Now, that was 2 years ago when that occurred. And as I said, the development wasn't built then. However, one of the towers out of the two towers that are being built in this site just sold an identical apartment to mine for $1 million. Okay, I purchased mine for $600,000 or secured it. So if you get your little digitalis out, and everybody has one on their calculator, you will be able to work out that that's an 8,000% return on investment. Not too bad. So let me run through the numbers again. Apartment was $600,000. I used a $5,000 deposit bond. 2 years later, the identical apartment to mine just sold for $1 million. So I got $400K in equity on paper. Now, yes, the fat lady has not sung. Oh, is that politically correct? I don't know if I can even say that anymore. Don't hate me. But it ain't over till it's over. So until you sell it, that's only a hypothetical profit. But the reality is the valuation is now $1 million on that $600,000 apartment. And how much did I put in there so far? $5,000. Now let me explain to you how this deposit bond works. Okay, so it is a cost of doing business. First, most importantly, you must have absolute confidence in the builder, developer, and the outstanding location. Location, location, location. It's not just a phrase. That's what you got to be careful of. Okay. Now, to use a deposit bond, number one, not all developers accept them. Okay, so you can't go up and say, I'm going to pay you with a deposit bond. It doesn't work that way. Okay, but there are some really good developments out there that do accept deposit bonds. Now, if you want to get one, first you'll need equity in another property, your home or another investment property. And they'll generally want about 3 to 5 times the equity of what they're asking for your deposit. So in this case, the deposit was only $30,000 because it was a 5% deposit on a $600,000 apartment. Okay, so if we times that by 3, that means around about 180, say $200,000 in equity in another property. Hey, presto, bada bing, bada boom, you've got yourself a deposit. Hand over $5,000, that secures the apartment. And what the insurance company is going to do is guarantee the developer that when they do complete the development, then you will definitely settle on the apartment. You won't run away to Rio. Does that make sense? If you do run away to Rio, they have ways and means of tracking you down. So don't get any funny ideas. However, that's basically how it works. So as I said earlier, that $5,000 is a cost of doing business. But normally, you need to put down your $60,000. And if you do that, then that's tying up a lot of your capital that you can't use to buy another property. Okay. So instead of using 30K, in this case, I used 5K deposit bond. Simple. Now, I wouldn't be doing my job if I wasn't very straight with you. Deposit bonds are great, but if it's a falling market, okay, you got to be very careful. So when you're using a deposit bond, this could quite easily go in the opposite direction. In a rising market, if you secure an apartment, if it appreciates in value, guess what? You're dancing around the street naked because you're making all this capital gain. It's pretty good. But you've also got to be aware markets don't go up all the time. And you need to handle, if it drops a little bit, well, then it may be that you have a little bit less equity in the apartment when you settle. So that's why you've got to be very confident and have a system, a selection process, so that you are in an outstanding location, so that even if short-term the market does turn, and I don't think that's very likely over the next sort of 5 to 8 years in Queensland. But again, I'm not a financial planner, okay? You do your own due diligence. But be aware of that, okay? So these are a great way that you can make great returns, but there is the chance that it could be worth less when the property is complete. And regardless, you have to settle, okay? So I'm not claiming you're making money. Don't sue me. I'm just educating you here as to strategies that I use. Okay. Hope you're learning something. Let me know, by the way. I love feedback, so shoot me a message. But again, it's not financial advice. Markets go up and down. Property selection and location is everything. So when I actually find a development that I am happy to refer to clients or even purchase myself, I go through a comprehensive process of at least 20 criteria that I believe are the most important before even starting to think about purchasing a property. And I put them in a consumer awareness guide because I've seen so many people, ladies and gentlemen, purchase lemons, and I don't like that. I do this more these days to amuse myself and keep myself busy because I'm pretty well semi-retired here, living on my horse property in the hinterland of the Gold Coast, otherwise known as God's country. Have a look yourself. This consumer awareness guide will help you do developer due diligence, so you can look at the background on the developer. It'll show you where to go to look at the real capital growth trends that are occurring. And it'll give you the link so you can check out the actual rental demand for an area and see if there is good supply, demand, etc. And there's 17 other criteria in there that are listed as well. So check that out, and you can do that by going to realestatewealth.au. It's for free, nothing to buy there. And by the way, if you wanted to have a chat to me, if you are serious about wanting to find a quality investment property, apartment, or even an apartment for you to live in, I'm happy to help, have a conversation with you. I'm not one of these high-pressured dudes that try to say, oh, let me flog you something. I am independent. And if I don't believe in it, I'm not selling it and I'm not suggesting it. So again, ladies and gentlemen, if you want the consumer awareness guide, just go to realestatewealth.au and I'll just recap again on my words of wisdom for you. Okay, so these deposit bonds, they really are a great investment tool. Not everybody accepts them, but a number of developers do. If you want to get one, you generally need about 3 to 5 times equity of the normal deposit. So if it was $100,000 deposit required on $1 million apartment, you probably need at least 300 to 500,000 in equity in another property. But if you do, then you're going to be able to secure $1 million apartment with probably about $15,000 instead of $100,000. To me, I like that ROI, but again, you got to make your own decision. So again, if you want to learn the criteria that I utilize before recommending a property, just go to realestatewealth.au and you'll be able to get your free copy of that guide. Till next time, bye for now.